talk about how to master personal finance in just 3 steps. Most people overcomplicate money, and I think that's exactly why they stay stuck. So my goal is just to simplify it in 3 easy principles so anybody can follow along, whether you're starting from scratch or you have like 6 figures saved up already. And I know this works because it's exactly what helped me save up $450,000 in the last 5.5 years. So let's start with what I call the 3 M's of money: make, manage, multiply, and we'll begin with make here. In my opinion, and from what I could tell, if you max out make, you're gonna have no problem handling the other 2 points. The reason that we start with make is because it's probably the most simple and yet the most powerful step in these 3 frameworks here. And what I mean by that is if you were to put all of your effort into make, these 2 are gonna come really easy. Let's start with some ways to make money. The most obvious one is to get a full-time 9-to-5 job. Kind of hand in hand with that is to get a part-time job somewhere. You could get some sort of side hustle, or you could start a business. Now this could obviously be brick and mortar in person, like a typical standard business, or you could go more of the online route. That's personally my favorite because I think it has a lot more leverage and a lot less operating cost, but to each their own. Before you start making money, you need the skills that will help you get the job or actually run the business successfully, right? So these are some of my favorite skills that I think anybody can learn with a good amount of effort, but they also have a really high earning potential. So data analytics, data is absolutely everywhere. It's the reason why I'm a data analyst today. And I think if you can understand data and how it works, you're not going to have a difficult time finding some type of job out there related to that skill. Same goes with coding. I know AI is really big right now and people are saying that the new coding language is English, but honestly, most companies still very much need people writing software because AI can only get you so far. It's a really good place to start, but when you need nuance, when you need business context, people who know how to code are going to be absolutely crucial. As far as sales goes, any sales job where there's no cap on the commission that you can make, I think is a really good place to start. I was always more introverted growing up and I hated sales at first, but the older I get, the more I learn how important sales really is. And you don't have to be what I thought was typical sales, which is like the used car salesman, really pushy and annoying and not very helpful. There's a lot of ways to go about what sales looks like. So that's a good one to pick. Engineering, that's another basic fundamental one. Engineers kind of run and build most of the world. So you can do things like civil engineering, mechanical engineering, electrical, nuclear, biochemical engineering. All of those are very much related to getting a degree at a university. So it's gonna be a lot more money than maybe some of these other ones that you could learn online, but it will also pay the biggest reward because engineers are in the top 5. They might even be top 1 for number of millionaires in the US. I'll have to look up that stat, but they're at least top 5. And then trade school is another good option, right? If you don't wanna do any of these, maybe you wanna work with your hands, maybe you don't wanna go into crazy amounts of student loan debt. Trade school is very, very in demand. People will always need electricians, plumbers. We're gonna need lots of air traffic controllers, right? So people can keep flying. So trade school can be a really good place to go if you want to spend less money on school, spend less time in school, work with your hands and do stuff that will always be useful. Now, as far as actually learning like the top 4 skills, for example, these are some of my favorite websites that I've actually used and I've found really helpful. YouTube is obviously free. You can learn just about anything from YouTube, which is why I think it's such an amazing platform. Udemy is another good one. Coursera is my favorite for things like coding and data analytics. They have a lot of really good courses from like IBM and Google, for example. And they also have some really good machine learning and AI courses that you can take. Relatively cheap. You could pay like $400 for an entire year with unlimited access. You could pay per course, which is like, I don't know, $30 or something. But I've always found that one to be relatively helpful. So like I mentioned before, if you can really focus on making more money, it's gonna make this entire thing far easier. And then you can funnel more money into investing, saving, and your bills and fun. I did this a few years ago where I spent 25 grand on a master's degree in data analytics, and it ended up getting me a promotion where I earned $20,000 more per year until I basically quit. So within about a year, a little over a year, that degree paid for itself. Buying the skills to make more money paid for itself, and it worked out. Another example that I do as part of a side hustle, so to speak, is making content. I've been doing it for about a year and a half, and now I make money on views, on affiliates, on sponsorships, and financial coaching, and all of it is online, so my expenses are super, super low, and it's basically just me building up a way to earn passive income. All right, let's move on to step 2, which is how we're going to manage the money that we've made from step 1. And this is where things get a little bit more personalized because it's up to you to manage your own money and make sure that it works for your life. But in general, we're gonna need some type of way to budget our money so that we can manage it effectively. Now, you can do this in a lot of ways, but 2 of my favorites are to use something like Excel or Google Sheets because it's free. And then a more automated way is to use an app like Nero, which is also free, and I'll link that below so you can check it out. But we just need some way to track our money, and I promise, and every time I've had somebody do this, whether it's my clients or my friends that I'm helping out, literally everybody is surprised at how much money they're spending on certain things that they honestly didn't expect to. And the number 1 tip that I can say when it comes to budgeting for the very first time is do not feel shameful about the money that you're spending or how much that you spend or how little money that you make. The last thing we need is for you to feel bad and to beat yourself up even more than you probably already do. Especially when it comes to money issues, that's just something that I've noticed working with people, is that they're afraid and they're ashamed of some of their habits or some of their spending that they've done. And that is absolutely not the goal. The goal is to just get better at this, right? It's a tool that we want to learn how to use better. So don't feel bad, don't beat yourself up. You're doing great, and I'm gonna help you with a couple frameworks that you can pick from. So I'm gonna share one popular framework that a lot of people talk about and recommend, and then I'll share an improvement on what I've used that I think is a lot better. So the first one is the 50-30-20 rule. This is related to spending 50% of your money that you make on needs like your mortgage, your groceries, your insurance, 30% on fun, like going out to eat, hanging out with friends, buying clothes, for example, and then 20% on saving and investing. I think this is a good place to start if you've never tried any type of budget before. It has a generous amount of freedom in terms of fun, so you're not feeling like you're shackling yourself or you're hating your life just so you save more money. And then you're still saving and investing a decent amount, which most people don't have that much money saved in general. So this one's decent. But I think an improvement that can be made if your goal is to save and invest a lot more money than you have right now. Maybe your goal is to become a millionaire before you turn 65, because who wants to wait that long? I think 60-40 is a lot better because you're spending 60% of your money on needs and fun. So it's a little bit more in terms of needs, a lot less money on fun just for right now. And then 40% goes to saving and investing. So this is a very aggressive number where we are saving as much as possible until we get a decent emergency fund. And then we're investing basically the rest. And splitting up money like this is one of the main reasons why I have $450,000 when I'm 29 years old and my wife is 25. We have two incomes, they're pretty decent. We keep our expenses really, really low. And then we just blast as much as we can towards saving and investing. And let me show you another example. But again, these are just frameworks to get started. Honestly, this is kind of how I picture how to set this up for yourself. So if the bottom is we're spending zero money on any of these three buckets, needs, fun, save and invest, and the top is we're spending all of our money in that bucket, you should be able to move these up and down throughout your life, and they should be changing all the time. So for example, the 50-30-20 rule is probably gonna look something like this, where we're spending about half of our money on needs, 30% on fun, 20% down on investing. My 60-40 says we're gonna spend something like 60% on needs and then 40% on saving and investing. But either way, we wanna be able to move these up and down to see which one is gonna fit our lifestyle the best. Maybe at first you don't have that much money, and so a lot of it needs to be needs, not much fun, and then we save and invest as much as possible. But if our needs start to come down, maybe our fun can increase, right? Maybe we keep both of these low so that we can really raise saving and investing and grow our net worth as much as possible, as aggressively as possible. Then later we dial this back and we have a little bit more fun and we increase our lifestyle a bit. So don't be afraid to play around with these a bit and find a framework that's gonna fit your lifestyle the best. Let's move on to what I think is the most fun part, which is multiply, because we're gonna talk about ways to invest. Now there's a ton of ways that you can do this, but I'm gonna keep it very simple with just three main ones right now, which is stock market, real estate, and crypto. And because I have the most experience between these three in the stock market, I'm gonna break down how you can do that. I also think it's probably the easiest place to start with the longest long-term potential and the least amount of work as compared to like managing your own real estate or buying crypto that might just go to zero. So I'll break down the different types of accounts that you can have, starting with retirement accounts. These are the main ones that you're gonna hear about. And you might have heard about a 401k and an IRA. Both of these are retirement accounts. Both of them have different tax benefits related to them and different contribution amounts, so you can only put so much money every single year. But I think where people get confused is when the words Roth and traditional come into play. So I just wanna be very clear. Roth and traditional are just types of these accounts. So you can have a Roth 401k, you can have a traditional 401k, you can also have a Roth IRA or a traditional IRA. So if you're wondering like what's the difference between all of these, why are there different names, why do they sound funny, just know it's related to taxes and how much money you can put into them, and then a couple other rules. And there's way more depth behind all of these, so I won't go too into that in this video, but just keep that in mind. And then we have some other accounts that are worth mentioning, like a taxable brokerage account. This is like the most basic one. There are no tax benefits. There's no special rules around it. You can put money in, take it out. You can buy stocks, sell them. The only thing to note is that you will pay taxes on any gains that you make in those accounts. 529 college savings plan and UTMA. These are generally for your kids. The 529 is mainly for educational expenses. UTMA, you can invest for your kid and do whatever, but there's less tax benefits with it. So that's the trade-off between these two. And then HSA is a health savings account. This is more related to healthcare, which is honestly one of the most powerful ones because you could put money in it tax-free, it grows tax-free, and then you could take it out for healthcare related expenses tax-free as well. So that one's like a superpower that not many people talk about. We ran out of room, so we're doing multiply continued here. Brokerages to use, there are three kind of main big players that everybody talks about and I think are really good. I've personally used all three of them myself. Fidelity, Schwab, Vanguard. These are going to let you do pretty much the exact same thing. You can open up all the accounts that we already talked about. I've noticed that Fidelity and Schwab have some of the best interfaces and they're more user-friendly. Vanguard, not so much. I think their app kind of sucks, to be honest. And Fidelity, specifically, their customer service is really good. So I think that's a really good one to start with. Now let's talk about what you're actually going to buy within these investment accounts. You're not just going to open up an IRA, transfer money in there, and then not buy anything. You have to log into the account. You have to click trade or buy or something like that, and then buy investments with the money that you transfer. That's a mistake that people make. We're going to keep it very, very basic. Some of the things that you can buy are index funds, stocks, bonds, commodities. So index funds are kind of like a bucket of stocks where there's a bunch of different ones in it. And depending on how big the company is, that's going to be represented by a bigger dot. So it takes up a larger portion of the fund itself. In the most simple terms, you just get to buy a bunch of stocks all at once with a single click. Stocks are individual companies. Bonds are kind of similar, but they're in the world of loans and credit. And then commodities are everyday things like gold and silver, for example, are, I think, technically labeled as commodities. But for our purposes, to keep it as simple as possible, we're just going to stick to index funds, and I'll show you some popular ones that people really like, and then I buy some of them myself. So I've drawn a line called risk. The more you go to the right here, the more risky this index fund is technically labeled as. And the more you go to the left, I'd say the less risky it is. And we're defining risk here as how much money it makes over time and how much it moves up and down over time, a combination of the two. So the further to the right you go, the more money you can make, but the more volatile it is, the more it moves up and down, which in the short term, if you sell, you can lose more money. And the further left you go in this line, the less money it's made over time, but it's also moved up and down a lot less. So again, in the short term, if you were to sell for any reason, you might lose less money over here. So VT is Vanguard's total world stock market index fund. This has something like 10,000 stocks in it, and it just buys a piece of basically everything. VOO is the gold standard S&P 500 index that you hear basically everybody and their mom talking about on the internet, and for good reason. This one has some of the best returns over the last 100 years, and also it's lower on the risk curve, so it's not as volatile as some of the other ones that we're going to talk about. VTI is kind of like the S&P 500, but it's all companies in the US, so I think it's something like 3,000 or 3,500 companies, and the reason it's a little bit more risky is because it just has more exposure to things like small cap stocks, which are just smaller companies that may not have as much success in the long run as bigger companies with a lot more cash. Then we have VXUS. This is kind of implied in the name, but it's all companies in the world that are not in the United States. So the US has done really, really well over the past 100 years and specifically in the past 15 years, but that doesn't mean companies outside the US can't make money as well. And so if you want exposure to the entire world, you could buy a combo of VOO and VXUS, or you could just buy VT with one single click. It's really up to you. And then last one, QQQM. This one has about 101 stocks in it. It tracks something fancy called the NASDAQ, and it's mainly focused on technology companies and growth companies. It is easily the most volatile on this list, so it goes up and down quite a bit throughout the years, but it's also been worth it if you've just bought and held because it's earned a lot more than these other four here. So a quick summary of what we've gone over. We have the 3 M's of money, which is make, manage, multiply. First, we want to make money in a bunch of different ways. We can do full-time job, business, whatever. We want to increase our skills to make as much money as possible that we can pour into these 3 buckets. Then once we have money, we want to be able to manage it well through some type of budget and make sure it works for our lifestyle. And again, you can always change these levers as needed. And lastly, we want to be investing, right? Stock market is probably a good place to start. And you can put it in retirement accounts to save on some taxes, or you can do things like a taxable brokerage account if you want access to that money sooner. And then make sure that you're not only transferring money into all these different types of accounts, but you're logging in and you're actually buying those index funds that we talked about on the other side of this. And if you want to see a more detailed breakdown of this whole system, check out this video next. Done.